Hello, welcome to JS Services Strategy Recap. Today we're going to take a look at the British pound. Pound is in a neutral digestion market state, and the structure of that state is balanced. So there's no sentiment bias. Typically in this type of market state, the market is either going to continue to coil, and it's tightening its coil, or it's going to break out. So this is the one neutral digestive market state that we actually anticipate a breakout because the market is coiled up and has brought sentiment into balance and it's ready to make a move, or the coil is just going to continue to tighten. Everything JS Services strives to do is to provide you with better clarity and awareness. I do recommend you putting the structure on a daily chart to get better awareness. As you come in, understand the market's neutral digestion. But what happened the prior day? Well, the prior day we had a strong rally. So this is a pretty strong bar where we have the market closing above a couple session highs. So this is more of a positive signal. The structure tab has a separate commentary, and that commentary follows the volatility shifts in the market, whereas the playbook strategy commentary follows the position of sentiment. Where's the R level, and that defines the strategy themes. The structure tab identifies the volatility shifts, and in this commentary it says there was a slight positive shift in the bias. The other information that we can garner out of this area, in this commentary we can go through it. It does provide other ideas for trade opportunities, and one of them it has on the sell side: avoid breakout strategies, but rather fade positive reactions after a negative breakdown. So after we get a failure, then fading into it versus pressing it into a new breakout strategy. So just more insight to potentially what is happening here, what we're looking to identify, what themes in play, what theme is going to dominate. And as we come into the session, we can see that we've had a market that had a big solid surge. There's a little bit slightly positive undertones to that surge. We dig a little deeper, we can see that the indicators coming out of the bear trend zone. So this market was depressed. It was in started to potentially shift into the bear trend, and then we pop back up. So how do we look there? If we're getting a failure below here, what's our expectation? If we're going to coil, we're going to coil. If we get a breakout below the R level, what's our expectation where we're breaking into support? It's kind of against this momentum. It's more of a digestive signal. Also, we can see we've got a higher move low here situation, and now the market's giving us this strong surge. So what if we get a breakout to the upside? What does that look like? Well, that looks like a little different because we have this higher move low going on here, and we have a market that's coiled and ready to bust out, and it's kind of in line with this action here where we get this positive shift back into neutral. Are we going to transition higher? Well, if we do, we've got a lot of room to go, and we're still in neutral. It's kind of shows us that there's a little more open, it's open above, and when we break back down, we're going to come into some support here, which is going to define shifting it back into the bear trend. So that would be defined with the downside pivot here. And then on the upside, it's a little opened up. We're going to come into some resistance at 22, but we have this positive signal, and we can look at this big sideways action, and maybe that's going to put us back up into here. So again, getting as much awareness as you can of what the true condition is. Another thing that's interesting to note is that the ADX is brown, and brown is neutral. So purple is trending, brown is neutral. So whenever you find a market that's balanced in the neutral zone, and we're in this state and structure with a purple ADX, sometimes that can be a good tell that, hey, there's a lot of energy there. So we do want to be careful with the ADX brown. So we have this insight of the bigger picture. What is the market telling us as we take a look starting at midnight here? What's happened? I've drawn in our metrics. So here's the British pound, and we have our APMD, average price map distance. We have our variance, our alert distance, and our maximum stop distance. So we have a 17-tick alert distance. That's our flip area. So we can use this variance, this metric, to identify if the market's above the level or below the level. We're in a neutral digestion that's balanced, so we're looking for a breakout. We're keying off the R level. what side's is the last traded price above it or is it below it, and that's going to help us to determine a breakout. And we're going to use the metrics on a breakout, so we're starting above, going below, giving us entries at either the alert distance or the variance. And we can flip this on the upside as well for a positive breakout. And also on a fade, whenever we're fading into something, we're anticipating to stabilize above that figure, either looking to enter at the alert distance or looking to enter at that variance. So overnight, the market is basically trading within our alert distance. I've marked them on the charts here. So here's the figure, and then we have our 17 ticks up and down. And as we start to move forward in time, so here's midnight, and we can see that the market overnight had been trading within the alert distance, and then here it makes a breach of the alert distance below the R level. So here's our R level, 17 tick alert distance, and now we're trading below it. We've also, just as the start of the European session, we have a market that's stabilized off the 141.96 level. So what's interesting about this, and again, it all goes back to awareness. This is all documented in the help. It's all part of this critical range upside pivot, downside pivot. Directional's in the middle. R level is equal to the directional today. And this zone is broken up into these other additional quadrants. So we have these interior levels, the CR plus and the CR minus. And sometimes when the market is going to digest and coil, so we're in a neutral state, sentiment's balanced. If we're going to tighten the coil and really, really kind of go linear for the session before we, break out and build energy, the market will stabilize, off this lower CR minus, and then stabilize and then reject off the CR plus as it coils, to tighten the coil, because we're in this wind up. We're in this wind up, and it starts out with the extremes being at the critical range, and then it narrows, and it will narrow within these areas. When we breach those levels, that's our tell that this market is going to at least make a play for the upside pivot, if not much more. And that all depends on what the state condition is. So in this condition, if we broke out, we'd have a bigger expectation because we've already coiled up, versus other market states we may not. So this is always a good tell, and then you have a higher low here as well, which is important. Again, it's all just about awareness, picking up on what the market's telling you. And so here, as we move forward, the market breaches the alert distance to the upside and generates this buy signal. Comes up to the CR plus, so we may be in for, at this moment, we may be in for a rotational day, and we should anticipate a reaction here. We know that if we breach this level, that's going to be the confirmation that this theme is engaged, but at the moment we're still in this optimal strategy theme. The market comes down here and provides a fade opportunity off the alert distance, just as we've shown in the example. If we're fading the market, we're starting to enter at the alert distance. Optimally, we're going to get in at the variance, but we're not looking for the market to enter down here. We're looking for the market to fade in front of it. So if we've had a breakout above a figure, we're coming back down to fade it. If we miss the breakout, we're looking to execute a fade strategy to engage in that theme, and it's given us an opportunity off the alert distance. So it gives that opportunity here. So I've added the variance so you can see this, and you can see how the market works through this microstructure. And now the market's giving us some insight that it's starting to build positive structure. So we're always looking at getting clarity. What theme are we in? Well, whenever the market's going to coil, it likes to do it symmetrically. So it's stabilized in front of the figure here. It rejected in front of the figure here. That's good symmetry. But then we broke back down here, and we bottomed out at the top of the alert distance. So this is a sign of strength, and then here's a confirmation as they're starting to breach the CR plus. It's giving us a tell. Now they could break back down to this area here. They could also just go right from here. But this is a tell that they're not fading into this. So if we were going to coil, the market's telling us no, it doesn't want to coil. Is the market going to build positive structure, higher move highs, higher move lows? We're just watching price action within market structure. I've added the alert distance for the upside pivot, this 143.22 level. fell just shy of it here, but the market's telling us it wants to move higher, and it's building positive price structure. This is what's important. You know, higher move highs, higher move lows, just keeping it simple, and it's starting to climb the market structure staircase. Whenever we talk about structure, here's positive structure. We're looking for a positive impulse or positive trend. You know, higher move highs, higher move lows. You know, sometimes it can be a little messy, but those lows are maintained. And then the first structure break is really just kind of a tap on the brakes. Sometimes it can foreshadow a pause for an hour or a half. Sometimes it can derail momentum completely. But the second structure break is the one that tells us, you know, this thing has been damaged, there's an issue, and you need to dial back your expectations. So we're always watching kind of a 1-2 punch there, and you can see as the market makes a higher move high here. This structure low point still down here, second structure low point. Now we make a new move high. So we're keying off this point, then we have this point, and the market takes out this one, but it maintains this positive price structure, and we're still having this, the market's still climbing this market structure step. Here we have pretty much a double bottom at that structure point, and here the market, you know, just comes into that metric. So this break here foreshadowed this messy action. If the market was ready to scale, it would have just held here and just gone. And that's important. The market's always telling you, is it ready to scale at the moment? Here it's telling you no. It's giving us a dial back, and it pulls us back up here, gives us this squeeze, holds this underlying positive structure, so we still have positive price structure. Market structure wise, we're still good above the R level, and this strategy theme is still in play as long as we're above the R level. So it's always a combination of price action within market structure. We're getting a little bit of, you know, kind of a coiling event here, but the market's holding firm. So it had the opportunity to coil earlier. It's still holding this positive price structure. We have to respect that. And then here we have an event. The market breaks out to the upside. We get a full APMD up to our initial target of 44.03. You know, anytime we are engaged in a breakout strategy, so we're in a buy R breakout strategy themes, we're always looking for a 2 APMD move. That's our trade vision. So as the market's making a breakout here, as it makes a breakout here and it gives you a signal, your expectation is the market's going here. We're going to get 2 average price map distances. So we're going to move from the directional area to the UT1. That's our expectation. And they paid out. We don't know how it's going to get there. It could be messy like this, and then all of a sudden have an event just like today. This could have scaled straight up. We never know how it's going to happen, but we're just reading price action within market structure. And we have a trade vision of what if. And when we take a look at the bigger picture, we get better clarity to what the market's telling us. You know, after we had this positive signal, we have a move back above the R level. What if this market breaks up to the upside with the trade vision that they can go here? It's just 2 APMDs. And then when we look at this chart, we still have this, you know, neutral digestion. We broke out. It's always nice to see this type of confluence. When we look at the daily here, we can see that the second target is matching up with this high. So it's always nice to see price confluence with market structure. So again, all this work is quantitative. It's all mathematical. So you can use your technical analysis to see when the quantitative matches up with the technical analysis. So, you know, just a straight strong bar situation where we close above 2 highs, that's a positive situation. Where's the sentiment? Well, for above 42.32, you know, if this market winds up and starts to hold structure, it could break out. If it breaks out, where can it go? It can go 2 APMDs. Where's 2 APMDs? That's 144.03. And look at that, all of a sudden and you have the same, it matches up with a target at 44.02 of this high. And they could easily just reject here and fall back into neutral. So it's combining all the information that you have to have better clarity, so you can align your trading tactics. For more information, visit us at jsservices.trade, and you can send us an email at info@jsservices.com. Look forward to working with you.